Welcome one, welcome all to DeFi Crypto and Airdrops Money Talks Edition, our Thursday at noon Central Time. Every Thursday with Jeff and Taylor. Taylor being a estate planning lawyer and Jeff a certified financial advisor. We talk about macroeconomics, ways that you can legally mitigate your tax liabilities, ways to diversify your portfolio, not just generate wealth, but protect your wealth. So with that, Jeff, Taylor, how you doing today?
Fantastic.
Yeah, it's a good day.
Awesome. Well, a little bit of bad news today. We had a legend. He passed away, and in tribute, we're going to play this real quick. If you're not following us, DeFi Crypto and Airdrops on YouTube, over on X, you can follow me on Veteran, the number 4 crypto. Our Discord, the DIG, the Discover Investment Group. You can join our Discord, and there's all kinds of great alpha in here. TJ over at Discover Crypto is always posting, news feeds on DeFi, crypto, just all kinds of different things, macroeconomics, a lot of good info there. Want to shout out Taylor's law firm. So if you are in Texas, he is in McKinney, Texas, just north of Dallas, and specializes in elder law, probate, estate planning, Medicaid planning, real estate law, and he owns a title company, business tax consulting, and uncontested divorces. So,
I don't specialize in all that, but we have attorneys that do. We have 5 attorneys at the office.
Exactly. Your law firm can take care of them. And it has over 200 plus 5-star Google reviews.
Now it's 300.
Great. What's that?
I'm at 300 now. I got to get that updated.
Oh, man. There you go. And then we got Jeff over at GCM Capital. And he is Taylor's business partner. They're in the same suite. You can go there. And so you can work on your investment portfolio. You can take care of all your legal stuff as far as taxes and wills and trusts, that sort of thing. And Taylor even dabbles in DeFi and crypto investing. So off the books, he's not licensed crypto advisor. Like if that's
a dabbler.
But he's a dabbler. And then, of course, last but not least, they do estate planning seminars. So, they travel all around the U.S. and basically do these seminars of, this all-encompassing, ways to grow your wealth and protect your wealth. So with that, quick look at the markets. TVL is down on DeFi. As everybody knows, we've had a little bit of a pullback in the markets. And RWAs, again, a little bit of a pullback in TVL, but it continues to grow. Everything's being tokenized. Everybody wants everything tokenized. It makes the illiquid liquid. It's going to happen. It's coming. In the past 30 days, its total asset holders is up 54%. In the past 30 days, TVL is up 2.58 overall. So with that,
you know what? I just came up with it. You know how like everybody's got these millennial and below naming all this stuff, to be like boomers name things functionally, and now people are all like, that up in my head. But here's what I'm thinking. We need to have a coin, gentlemen, called MELT, MELT, because it makes the illiquid liquid. I like that. Oh. I did the hard part. You guys figure out how it works.
That's a good one.
I mean, that's not bad, right?
Yeah.
For like real world assets. I can't talk. I'm having a stroke. It's gonna be me. It's gonna be.
You just put me on, Michael. I'm better looking than both of you. So
I'm gonna be the third one, right? Goes in threes. I'm just gonna like stroke out right here. Anyway, that's my idea. MELT. I like it.
All right. I like to set up better if we're not sharing the screen.
Yeah.
There we go.
Thank you for making us look all pretty here.
All right. So what we're going to be talking about today is there is some new tax laws that are coming down the pipe. As like I said, we have two, very credentialed individuals that can talk on this topic. And then also, we're going to be talking about an outlook for the August crypto markets and traditional, investing markets, so that, maybe give you a little bit of insight into what potentially we could expect in August, as far as our portfolio. So, Taylor, you want to kick us off?
Yeah. So first thing I want to kind of go over, though, is where we are in the market, in the sense of the market is we're having what we call blow off top. So when you have blow off tops, they're scary because you have this feeling that you're missing out, because you are if you're not invested. But at the same time, there's a big problem if you jump in right now, because we're at all-time highs. But generally, I try to keep up to date. I pay a bunch of money to different organizations to kind of send me different things. But right now, there's nothing in the market that's suggesting like a big pullback. In fact, it looks like August should be a good month, as long as we don't have a black swan event. Like wake up one day and then find out that the Trump is going back to all the old tariffs or something like that. So we don't have one of those like April events where you just wake up and all of a sudden there's something crazy. We still should be good on the crypto side. Bitcoin is seeing a little bit of the pullback, but Ethereum is now starting to make gains in towards the dominance. So Ethereum looks like a good place right now if you are wanting to get into crypto, but don't really want to have your own wallet and stuff. Right now, MARA is a good buy. Right, it's at its current price right now today.
What is MARA?
So Mara it's another kind of like IBIT, which is they invest in crypto, but you can do it through your actual. It's an ETF, so you can actually invest it through your a brokerage account. So it's a way to get into crypto if you can't jump on it. Circle looks like a great buy right now, in the sense of
Coin looks like a good buy right now. It usually does really well until the peak of the market, and then it's usually a good time to sell it for the pullback, because the Coinbase's stock.
Yeah, let me give some numbers for buys. Buy and selling, like its range right now is. Let's look at Coinbase. What is Coinbase's range?
If you want to share your screen, let me know. I can switch over to the other setup.
I could probably show. I'm just going to do it. I'll just give the numbers. So right now, the range with Coinbase is, like the low end of the range is about $378. High end is at $425. It's about a 7% upside, downside about 5%. Mara, MARA looks good right now because it only has a downside about 2%. So it's like it was just as of this morning at 1757, and its low end of the range is like 1711, with a high end of a range of 20. So that's an upside of about 16%. So if you're looking in that way of like, hey, I want to dabble into crypto, but I just don't know how to do the DeFi stuff yet, and kind of get your feet wet in losing money, you can join us.
if you want to break your cherry on losing money, this is how you do it. Crypto is how you do it.
Jump in and join us. The Genius Act was passed last week or the week before? Holy smokes,
yeah, and it was signed into law.
And so President Trump also signed a repeal of the IRS DeFi broker rule back in April. So we don't have to worry about being considered a broker when you're dealing in DeFi. Mm-hmm. There's a new tax legislation going through Congress right now with crypto. Don't have a lot of information for people on it.
I got a little bit.
Okay, then Jeff, you jump in.
Are we talking about the Clarity Act? I think. So
the Clarity Act passed.
did it pass?
Yeah,
But I
Trump
thought it
signed
passed the
it.
House, but not the Senate.
Oh, okay. Yeah, it hasn't got past Senate yet.
Oh no, yeah, sorry, the Clarity Act, not the Genius
Yeah.
Act.
So not the state, not the Genius Act, but the pending. So the Clarity Act is pending Senate approval. It passed the House 294 to 134 in July. It defines when a cryptocurrency is a security regulated by the SEC, which is bad, or a commodity regulated by the CFTC, which is good. Most tokens would be classified as commodities, reducing regulatory burdens for crypto platforms by avoiding securities laws. Tax implications. If passed, this could simplify reporting for certain tokens, but does not directly change tax rates or reporting requirements. It may reduce compliance costs for exchanges, potentially affecting how they report to the IRS. And of course, there's the also passed was that central bank digital currency ban was passed in the House. There's also a strategic Bitcoin reserve and digital asset stockpile thing that's pending. And then supposedly
that's what everybody's holding off on, because if that does, that would be a huge boom for Bitcoin.
And right now, there's also they're discussing. I kind of think if we do it too as a commodity, this won't happen. But right now, there's conversations about whether or not, which would be a huge, well, it might stabilize the crypto markets, but it wouldn't be good for a lot of the, what I still consider most people in crypto that are trading are early, they're early movers and they're so volatile. They're talking about getting rid of or applying the wash sale rule, which means if you sell a stock, if you were to sell a crypto, anything, and then buy it back within 30 days, you wouldn't be able to recognize any losses within that period of time. That could be really problematic because in stocks, there's all these stories. And it really first time I ever heard about it was the first day trading boom in the early 2000s, late 90s. People would day trade stocks and not understand, and they would keep track, right? And so like maybe they had $50,000 worth of gains in a month, but $40,000 worth of losses. So they only made 10 grand, right? Well, when the wash sale rules applied, if you're not classified as a broker, in other words, it's not your job to be a day trader, what would happen is the IRS would come back in and go, no, you made 50 grand. We're disallowing the losses because they happened so quickly. You were just doing this as a trading structure versus an investment. And so people would end up having to pay owing hundreds of thousands of dollars on income that they didn't actually have. So you have to be very careful with watching the tax landscape so you make sure that your trading strategies don't shoot you in the foot from a tax perspective. Now, obviously, there's ways around that. You can trade inside an IRA. If you trade more than $25,000 and say it's you're making a living at it, you can. There's things you can do to avoid the wash sale rule in securities. So I'm sure that would also apply in crypto, but it'd be simpler. It'd be simpler if you just didn't have to worry about it. And right now you don't have to worry about it. So it'll be interesting to see what happens there.
Absolutely.
Yeah, this really is confusing. Like, because we really don't know how DeFi. Like, I really struggle trying to figure out exactly how I'm supposed to report my DeFi because it works in a very interesting way.
Well, yeah, because I mean, it's is it every time that a yield hits your wallet? Is it whenever you harvest the yield? What is the taxable event? Has always been my question.
I would run it through like a business and treat it like as if it was income right now. If you're doing it.
That's kind of what I've been doing, but it's a good question to ask, and really what they need to clarify when it comes to tax.
I mean, it's the Wild West right now. Nobody knows.
Yeah, but that's the problem. Is those of us out there, this is just kind of from the normie, not the expert like you guys are. Is when it comes tax time, it's like I want to do what's right because I don't want to get in trouble. I don't want to, have them, audit me or, come take my house or anything like that. So, but you gotta tell me what the rules are.
Like Michael, you clearly can say it's business. because I mean, you have a podcast, you're out teaching people how to do this. So you can look at it and go, okay, well, it's my business. I actively trade this. Because if you're an active trader with stocks, you can get around a lot of rules because it's a business. You're just running things through your business. And DeFi for you is I run it as a business because I kind of consider it like part of what I'm doing for estate planning. I'm learning how this works. I'm going to do it. And right now, if you're going to do it, I would try to just say, well, I invested this much money at the end of the year. I put, $50,000 into my DeFi. After all said and done, at the end of the year, I now have $70,000. So I had a $20,000 gain. And then just, put it through versus trying to go, well, when you're DeFiing, is it buying, selling stock constantly? Is that what it's doing? And so these are dividends. And then you now have this problem with your crypto constantly being bought and sold without you really controlling it.
So I did while you guys were doing this, I did research on the infallible Grok because obviously AI is always right. But right now, so again, what I was referring to is the potential of the wash sale rule being applied to trading crypto.
Yeah.
So right now, that doesn't apply.
Yep.
So right now, basically, you have two different whether you're getting airdrops, whether you're getting staking yield, whether you're getting DeFi, income, all of that is taxed at ordinary income rates.
Okay.
If you sell your coin, right? So actually, let me go back to make sure I'm.
And that should fall under either short or long term capital.
Trade or swap tokens earned from DeFi, and it says trading a reward token for another crypto or USD. You trigger a capital gains tax event. Short-term capital gains is held less than 1 year. Long-term capital gains is held greater than 1 year. Gotcha. So one of the things that I think is going to be problematic about that, right, or that maybe people don't. Again, this is my first perusal of this, so I'll dive deeper by next week's show. But here's the challenge with that. So let's just say you get, I don't know, because when I assume you get paid your yield in the same token.
Here, I think I know where you're going with this, and I'll summarize it and let me know if this is what you mean.
Yeah.
So me and DeFi, I'm earning yield. So say that I'm on Uniswap and I'm doing an Arrow USDC pool, and it's paying me out in both USDC and Arrow. So I'm earning that, and that's a certain amount, dollar, wise. Say that, I collect that is income. Now, Arrow takes a dump at the end of the year, and I have to pay taxes on that, but I have to claim the dollar value when I harvested that yield. So that difference, might be substantial. I mean, like if Arrow dumps by half, and that was I earned $40,000 over the year, and it, it dips, 50%. I still have to pay that full amount, not the new amount, correct?
Well, no. So I think yes and no. I think what I'm trying to say is, so let me make sure I understand this correctly. And who's going to be my guinea pig and just set my account up for me? I'm ADHD. You can't expect me to actually do this. Like
I have offered to help you multiple times to get set up.
Here's what I'm saying. So X, whatever coin you're doing really well in right now, I don't Plume, whatever, right? If you earn yield as Plume, so let's say for argument's sake, the yield. My understanding is the yield. Let's say you earn, I don't know, 10 Plume coins or some shit, or it doesn't matter. 10 Milt coins that I just invented, and they're each $1.
Yeah.
You have, I believe the way I'm reading the research is, that's considered $10 worth of income.
Exactly.
Right then, to what you're saying. But then, though, let's say Plume doubles, right? And then you say, I'm going to trade the USD to give me some cash, or to then get cash or whatever, right? So so it doubles, you trade the USD. There's also the gain from 10 to 20. You're going to pay short-term capital gains on that if you do it within a year.
So you got to pay income tax on the initial 10.
And so what I think is concerning to me, considering how complex, and again, I'm not saying it's a bad thing, but because what I see people, what you guys talk about, is like, oh, I had this coin and I did this over here, and then I transferred, I turned it into this coin, which I then swapped with that coin, and then I did this, and I spun around 3 times and chanted, Candyman, and looked in the mirror, and boom, I made some money. Each one of those, from your perspective as the crypto trader, is, I traded 1 coin and I got 2 coins, and then I took these 2 coins and I got 4 coins, and I got these 4 coins, and I traded 1 coin. But
Jeff,
each one of those is a haircut.
I already solved this problem.
We need to hear from other Jeff. We need to hear from other Jeff, Taylor. What does other Jeff have to say?
Other Jeff says, just run it through a business, and then you can just have it. You can take all your losses at the end of the year and pay it out to yourself, whatever it is, as income, and don't worry about all that.
So they need to start a business, correct? Like an LLC or something like that.
Because it's legitimately his business.
I'm going to respectfully say maybe not, but we'll see. But I'll think, yeah. But if that works out, but here's the point though, right now, at least for the majority of people listening that are active in crypto, are not running it through a business. They need to remember, if you bank $10 worth of value, you owe taxes on that. And then when you
Jeff, I personally believe DeFi is engaging in a business, because
but what is the IRS believe?
You're offering your crypto to be used in the transaction. Like that is what you're doing with DeFi.
Well, how do they treat it when I put my money in the bank and the bank, invests my money and pays me yield?
Exactly. It's the same thing. So the bank gets to use it and they get to write it off. Why wouldn't I be able to do it? They get to go to banks and go, oh, all this.
But you just answered your own question. You're not. So you get interest. You get a 1099 a year that says this is how much interest we paid you. Mm-hmm. Even if you took that interest and bought something else and then lost money on it, you still owe taxes on that.
Yeah, but Jeff, you are the bank in this situation. The bank takes your money, lends it out, uses your money to go do mortgages and everything, and then they pay you interest
on the profits they make.
What?
They still pay taxes on the profits they make.
Exactly. This is the same thing that you're doing when you're running your business. See, that's how I would do it.
Yeah, no, right. Taylor has a valid point. I'm
not saying he doesn't have a valid point in like the real world where common sense rules, but we're talking about the IRS.
We're talking about in the IRS world.
Yeah.
Well, my problem is if the IRS is going to take that position, then your argument back is, well, why do you do this with the banking industry? This is what the banking industry is doing. We're just doing the same thing that the banking industry is doing. We're allowing our money to be used in order for other people to make money off of it. I don't control that. I don't have an ability to go into those DeFi platforms and say, "Oh, don't lend to this person." I'm offering up the money. Mm-hmm. So in this situation, my argument would be is when you're DeFiing, you're running a business, and that's how you should report it. But like Jeff's point though, we don't have anything from the IRS or Congress or anything on how we should do it. But there's just no way. There's no way even anybody, if an IRS agent showed up, he could calculate your taxes. There's no way he could sit down and figure it out because there's no information out there to show, okay, like you don't have access to the gas fees that were paid and exactly how much was at what time.
I mean, it's all on chain, but if there is no rules dictating, the rules of the road, then, how can they enforce a rule or a law? And that was the big issue that, during the XRP case, with the SEC,
they treat it as property,
because they were arguing with the SEC saying, give us the rules, we'll follow the rules. And the SEC was like, there are rules, there's the Howey test. And, we're saying that, this is, how it is. But that the problem is that they haven't clarified what the rules are. And in the absence of that, it's, it's a slippery slope, so
the honest way to do it is you go at the end of the year and you look, did I make a profit or not?
Yeah.
And then I would argue that it's income, not capital gains.
And that's how I'm going to treat it.
It is income anything related to, so this is what it says right here. I'm looking.
Why
It
are
says,
you
so
blurry,
right now,
Jeff?
the
Yeah.
IRS treats cryptocurrencies as property. So DeFi transactions, staking, liquidity pool rewards, token swaps are taxable events for an LLC as an individual. So that's all considered ordinary income, right? Now again, as long as you keep track of it all, it's fine.
Yeah.
But
well, the blockchain, keeps track of it, and your wallet keeps track of it,
right,
because every single transaction you make is logged, like in my Coinbase wallet, and I can download it at the end of the year and give it to my tax professional.
yeah,
And it shows.
this isn't as big a deal as people. I'm just stating that people need to remember it's taxable. That's really the bigger thing. They need to remember. I don't know why I'm out of focus, but they need to remember it's taxable. That's weird. I'm all blurred.
I know. Why are you all blurry, dude? Like, are you taking off your clothes or something? I think it thinks you're being nude. Like,
Jeff
Jeff
is going interdimensional. He's phasing out into another dimension.
Hold on.
Well, real quick, I've been. There we go. Perfect. That's a great shot right there. All right.
But he froze. Damn it.
Yeah, he did freeze.
There you are. You're back.
What's happening?
Yeah. You're back.
So I want to have you guys answer Victor's question, because he put it a little while ago, about 15 minutes ago, but I want to make sure we get to it. I'm thinking about rolling profits into a short-term rental and maybe save capital gains. Do you guys want to address this? Because I kind of feel like that we should.
Are you talking about, Damon? I got to go to a completely different picture now. Are we talking about? I saw that when he says roll into a short-term rental. Are you saying like do a 1031 exchange because it's like
no? I think what he's thinking is like, hey, I made these profits from my crypto. Now I'm going to go buy a rental property.
Mm-hmm.
And the problem with that is like, well,
that's still taxable.
Yeah. So if you're running it in an LLC, and this is all under one business, and somehow you're able to explain to the IRS why moving this into a rental company is part of your same business. I don't know how you would do that, because those really sound like two separate things. It sounds like you're recognizing the profits, and you're going to have.
By the way, this is all hypothetical entertainment value, right? Not technical advice, so we don't get in trouble.
Yeah, not financial advice. Yes.
Go consult your tax consultant, right? But
yes, all those disclaimers.
In my opinion, what you're doing is you're running a business when you DeFi, but when you pull out to put it in real estate, you got to recognize it, pay your taxes that you owe, and now, and then you can go invest it somewhere else. Like, for example, I run my law firm. I get paid a paycheck. I take my paycheck, and when I get my paycheck, then I turn around, and if I want to invest in real estate, I can do that, but I got to pay my taxes on the gains that came from my law firm. I can't take my law firm, like my profits from my law firm, and go, oh, I'm going to go buy a building now and not recognize any taxes, because it's a different investment I'm putting it into. So just so you understand, that's like it's like when you have your gains at the end of the year, you need to recognize them, and moving it into something like buying real estate would be separate. Like, for example, I actually had this happen where I bought this building that we're in. The year that I was doing that, well, I took money out of my law firm because I was just holding it there, and moved it over and used it part as the down payment. I still knew at the end of the year I was going to have to pay taxes on that money, even though it went into the down payment for the building. I just accounted for that and go, okay, I'm going to owe about this much at the end of the year. I need to make sure.
Gotcha. And I think that that's what we need to understand as we start taking profits in crypto, is that, there is going to be a tax burden. So, to summarize what Taylor's saying is, and again, consult your tax professional, but, you can treat it like a business. So, as you take profits, like me personally, I'm taking them in stables, because when it comes to, the end of the year, I'm going to have those stables in DeFi earning 10, 15, 20% for me. And it will be available for me whenever I go to do my taxes and they say, you owe X amount. I can just say, I can cash out that stable coin and say, here you go. I'm not going to be cashing out into Bitcoin or anything else because I don't want there to be a pullback when it comes time for me to pay those taxes. And I end up coming up short. Like, I'm basically cashing out on a pullback. I don't want that.
Michael, I need to walk you through something because I need you to understand this. You probably need to form an LLC and elect S corp status for this reason.
Can I do it now, even though I'm like halfway through the?
You can start doing it. You can only do it for your paychecks going forward. Going forward. But yes, you should start it immediately. The reason why is you're going to get a double tax problem because you're running this as a business.
Yeah,
your double tax is going to come. You have to pay your self-employment tax. That's 15.3% because you don't have another job. So this is your job. This is what you do, and so and then you're going to have to pay your income tax. So what you want to do is establish right now a payroll and then pay your self-employment tax based off that. So you're paying yourself every month. And
let me know a good time I can call you, and if you have time, maybe help me set all this up.
Yeah, and you can do a low amount.
I did see Victor had a good point here. I'm sorry because my brand new camera is working more, so I'm looking at my small screen and my stuff's over here. But
you can look. We can just look at this. We can look at the side of your face. Don't worry.
No, it's fine. I'll fix it. It's just like I like having my big screen in front of me for research. But Victor is asking about bonus depreciation. So yeah, I guess what threw me off about that, Victor, was when you're saying a short-term rental. I was thinking, but yes, I mean you would theoretically, if you have a separate business that is a rental business, and you go buy property and you write off a bunch of depreciation that first year. Well, then yes, that depreciation will flow through to your taxes, and your gains from your crypto will flow through, and they'll offset each other. But that's different. That's different than making it not taxable. What you're doing is just using a tax loss from another source to offset tax gains in your crypto, which is fine, right? That's good planning. I mean, you should. I do that all. Honestly, I use oil and gas a ton for my accredited investors, because when you put for every dollar you put in oil and gas, you get to write off a 95-cent loss, right? So if I got a client that's making a couple $1 million a year and they put in $300,000 in oil and gas, as far as the United States government's concerned, they made $285,000 less. Like, it just comes right off the top. So absolutely, tax planning, in addition to whatever you're doing crypto wise, is wise. I'm just saying that before you start flipping things around willy-nilly, just remember that if you have gains, when you lock those in, if the next thing you do goes to trash, yes, you can wipe the losses off and so on and so forth, but you need to keep track of all of it, because you don't want to get surprised at the end, like Mike's saying, and all of a sudden you're going to pay your taxes next April with your crypto wallet, and your crypto wallet's in half. The IRS ain't going to care. They're going to say, give us what you owe us.
Yeah.
Yeah, and so... But that's the bad part of DeFi is I think it's going to be viewed as a business. It's going to be income, because I don't think there's any way you're going to be able to actually do tax accounting and try to do it as capital gains, where you're going, well, did you sell within the month? Like all that, you can't figure all that out. There's no way the way it works, because you don't, DeFi. I mean, I guess you could do a broad thing where you don't move it out and just, they can make a rule saying that when it's buying and selling it with the computer, you don't control that. Therefore, it's not you doing the buying and selling.
Right. Yeah.
Well, another thing too is like there's a new project called Mamo, where it's an AI that is doing all of the swapping and trading and stuff, and that's not something that you have visibility on. So, like I put my Bitcoin, my USDC, and my Mamo on there. It's moving it around on Moonwell to different vaults, and to maximize my earning. But I don't know what it's buying and selling. So, how does the IRS look at that?
This is why the final regulation is going to matter so much. So in the securities world, so two things. One, this is why I would recommend anybody that can afford to do it or has the assets or whatever, convert to a Roth IRA or create a Roth IRA and get a self-directed IRA on one of these platforms that supports crypto, and you can do all this in there and not worry about it. In a traditional IRA, you don't have to worry about it either. It's just you're not going to touch your money till you're 59 and a half years old. But in a mutual fund, so let's say you buy XYZ, you buy 100 shares of, Taylor's mutual fund. So, well, what really happens at the end of the year is Taylor could be day trading in that fund. And at the end of the year, all of those things are passed through to you as an aggregate loss or not, right? It's all kept track of. So you are liable for that, even though you're not the one pulling the trigger. Because when you bought the mutual fund, you're effectively giving almost like a power of attorney to the money manager. So if I was the IRS, I would simply, or if I was the United States government and I want revenue, which of course they do, I would be like, look, yeah, everything that cycles back to you that you then convert to some other position, or is a growth in the form of a deposit of more coin than you had, you're gonna pay taxes on it. It's gonna be ordinary income. I don't really see why it wouldn't be. Now I do understand what Taylor's saying is, I do understand that, but the flip side of that argument is when you buy a bond, you're lending money to, like if you go buy a bond directly from a company, you're lending money to that company. And they're paying you interest, and at the end, they're going to pay you back your principal.
Yeah, but that's what happened. DeFi, that's not what's happening. You're not getting paid interest. You're getting paid gas fees for what they're doing. So the fees, they're using your crypto, and when they do that, they buy and sell your crypto, and they lend it out in that transaction in order for the transaction to happen quickly.
You're basically providing liquidity for swaps. So like if somebody wants to swap Ethereum for Bitcoin, Bitcoin for Ethereum, then you would put an equal amount of Bitcoin and Ethereum in a liquidity pool to facilitate the swapping between those assets.
Right. And I'm just saying now.
And whenever anybody does that, they pay a very small fee. And part of that small fee gets paid to you for providing that liquidity.
Yeah. Sure. The hard part here is you can't do that with stocks or T-bills or bonds.
You actually can now, because with the tokenization of those, like Nest Credit, or Nest on Plume Network, they have tokenized treasury bills. And I was actually telling Taylor about this a couple days ago, where you can buy tokenized U.S. Treasury bills, earn 4%, and then you can take out a loan against it for like 0.08%. In a PUSD, a stable coin backed by USDC. And so, there is ways that you can use, treasury bills and, and other traditional vehicles in DeFi now.
Yeah, but the reason why it's not comparable is because you don't have gas fees exchanging or swapping stocks or bonds. That doesn't exist in that world.
Not yet.
Yeah, not until it gets tokenized.
I want to be clear. I'm not saying that the gas fee structure, like you're talking about, is what's causing the taxation. I'm simply saying that let's just say for fun, and I understand it's a little bit more difficult because you got the balance of the two different assets. But let's say you get to the end of the year, and you start the year with 1,000 tokens, and you end the year with 3,000, and the entire thing, all you did was the yield, right? DeFi. I'm saying that the IRS is going to look at those 2,000 tokens. As those tokens hit your account, what was the net value in US dollars worth at the time? You add it all up, that's your income.
And that's why I want to cash out in USDC, because if I'm cashing out in USDC, that during that taxable event, I'm locking in that value. So
exactly.
If I was cashing out in Bitcoin, and Bitcoin has a pullback when it comes time to pay the IRS, then basically, I might be paying, $50,000 worth of taxes when I actually only profited 25 grand.
Right. So yes. And that's what I was trying to get across is you've got to be, the volatility of the asset class dictates that you at least be aware of A, what is my tax liability, and B, where am I planning on paying it from? Because I would suspect that a lot of people are going to be like, well, I've got yield, but I'm also investing for the long haul for appreciation on these coins that I think are going to go up, or these assets are going to go up. And then you get to you get the double hit of, well, now I got to sell the crypto to have capital gains that I'm going to have to pay the next year to pay my income from this last year. And so you just want to be careful. It doesn't mean it's a bad investment by any means. It's just you don't want to be ignorant of what you're incurring as you.
Yeah, but Jeff, I'll explain. I need to go into a little bit more detail so you understand DeFi a little bit better, because I'll show you why if it is done that way, it will destroy the DeFi market.
Let's actually do, if you guys don't mind, we have about 20 minutes left, and I want to talk about the outlook for August, but let's actually do let's kind of game plan an episode and really dive into strategies on how to potentially cash out this bull run and mitigate our people's tax burdens.
All right.
Does that sound like a good idea?
You guys want to stay on the tax thing, or do you want to talk about like the market? Like what
final thoughts on taxes, Taylor?
And the taxes part. The taxes part are going to be incredibly complicated because there is nothing like DeFi in traditional finance. And so there isn't really any rules right now. The easiest way I could tell people to think about it, why this idea, what Jeff's talking about is logically, I think, where you would come to the way that you would treat it, trying to be the same as stocks. I'll have to go into a little bit more detail why, if it is that way, we're all fucked. And basically you owe more taxes at the end of every year with DeFi than you'll actually get out of it. So hopefully they don't do it that way. But I'll explain to you, Jeff, why that is, how it works.
That's cool.
But ultimately, in everything right now, the easiest way to handle it is, say it's a business, you're running a business, and that you're getting income from it. And if you don't have a job, you have to understand the IRS will treat the business as your business, meaning 100% of what you make, the profits, will be taxed at 15.3%, self-employment tax first, and then you'll pay your income tax on after that.
Right, which is why I think so agreeing that Taylor and I are a bit apart on this right now, as I need to learn more about what he's talking about, and I think I want to point out the research I've shown him. What it looks like is, because there's not specific crypto rules currently, or in a significant way, the IRS is defaulting to treating it like property, which is why this is. So in a sense, every single time you're if you think like a house, if you're renting out, if you have an Airbnb, and you might change your rates through the year, right, or what you rent it for per night. But if you have 50 different people that book your house at different rates, that's 50 different little instances of income that's based on whatever that cash flow was, right? And on the flip side, if you sell the house and buy a house, well, with crypto, you've got people renting 24/7 and buying and selling 24/7. So it's just a tremendous amount. It's luckily it's all automated, but it is still very onerous. But the other thing I wanted to point out is, if I were going to do a business, I would think you actually set it up as a C Corp and not an LLC, because a C Corp pays 21% in tax, but it only pays 21% flat tax on what your profit is. So what you could choose to do is pay yourself a salary at the end of the, once a year, right? You don't have to do it monthly. Get to the very end of the year and pay yourself your annual salary, and you pay that out, and then that's going to be taxed to you as W-2 income, but you wouldn't be double taxed, right? And you would avoid all of the hiccups in between. So
better idea. That's why you're the financial advisor.
So I think it's the way to do it. But again, I gotta do more research.
So. Well, and I'll tell you what most of the crypto tax, no quotes, the crypto tax experts that I've listened to say that the best rule of thumb right now is capital gains, short-term and long-term capital gains on your crypto is the way it should be treated.
Not counting DeFi, absolutely.
Yeah. So that's my closing thoughts on the tax part. We will do another deep dive on this and get it a little more structured and prepared, because I really do want to give people a way to figure out how to potentially mitigate their tax burdens in DeFi and in crypto. But let's go ahead and shift over to August and kind of your individual outlooks on the macro markets, on traditional finance, and crypto. Taylor.
All right. So my outlook right now is you need to not be heavy, like 100%. If you're investing in America, we have a lot of problems. We're at all-time highs on different things. Some good countries to invest in right now that look good for the at least, the rest of the year kind of situation. Germany is one country. China is looking better in the sense of it's growing. I think China ultimately is going to annihilate everybody else, especially when robotics comes out. They have all the infrastructure to build the robotics. We don't. They're going to. Their economy will explode when robots really can function. The Qs, even though they're at all-time highs, there's nothing showing that there's necessarily going to be a slowdown unless there's a black swan event. So you always might need a hedge for that.
And what's the QQQ for those of us that aren't deep in investing?
That's just the ticker symbol for. So you've heard of the SP 500, the ETF that tracks. That's the most common one is SPY. The QQQ is the 100 stocks, 100 large. I don't know if there's only 100 or 100 largest stocks on the Nasdaq. So it's effectively the Nasdaq.
All right.
Yeah. So it's the tech companies.
Okay.
So
all the tech, all the biotech, computers, all that good stuff.
Okay.
Yeah. Quantum computing is another one that you could go after right now. QTUM is their ticker. They've been doing really well this year. I wish I'd have got in earlier. Commodities are going to go up. Bitcoin is viewed as a commodity, actually, in the traditional finance world, mainly because the dollar is being weakened consistently. I mean,
that's a
segue into Jeff going off. Right now, though, if you need a short, healthcare industry is probably a good short.
That's interesting. All right, so how do I share screen?
No, just here. I'll hook you up. Wrong one.
All right. So check this out. What Taylor just said. As everyone marvels at the performance of the U.S. stock market, just remember that in CAD, Austria dollars, yen terms, the S&P 500 is barely up more than 1% for the year, flat against the Kiwi and the sterling is the pound sterling, and down 3% in peso terms, down 5% in euro terms, and down 6% in Swedish krona terms. Oh, and down 20% in gold terms.
Yeah, gold is killing.
So when you see the market, now of course we're talking about the S&P 500, the stock market. So yes, the stock market weirdly is still up today relative to the beginning of the year, even after we got past the tariff tantrum. But it's basically 100% because our dollar has cratered this year due to our fiscal and monetary policy, particularly our fiscal policy and uncertainty around tariffs and other things. But so yes, you're worth more. It looks like we made money,
yeah,
but not really, right? Not compared to our peer group. So that's it's like I remember years and years ago, I had a guy call me up, and he heard me on the radio, and he calls me up, and he's like, "You seem like you think outside the box. So let me tell you what I want to do because my financial advisor says it's a bad idea, but he just doesn't get it." And he goes on to explain to me that his brilliant idea is to take his mom's got CDs. She's like, at the time, this is like 2011, but she's like in her late 70s, and he wants to earn more money than these paltry interest rates on CDs after the financial crisis. I get it, right? Finds out that he can get like 18% yield by putting it in CDs in Tibet.
Oh God.
His idea was, I'll just buy Tibetan CDs, get 18%, guaranteed, bada bing, bada boom. And so I immediately pull up the exchange rate. And I said, well, I don't think that's going to work like you think. And so I did a little bit, like on the fly, right then I look up and find out, A, you can't buy Tibetan CDs without actually having a bank account in Tibet. B, you cannot do it remotely. So you have to get a flight with you and your elderly mother, fly to Tibet, put the money in, get the 18%, then so go from dollars to the bet currency, which I don't remember what it's called anymore, back to dollars, right? When you do all of this, theoretically you would major 18%, but only if it's a 1-to-1 exchange ratio between dollars and bet currency. So I look it up, the last year, it had lost 30% against the dollar. So I'm like, you do all that BS, fly,
and lose money,
and you lose 12%.
Yeah.
He hung up on me. He's like, you don't understand, click. And I'm like, no, no, that's not really what's going on here, buddy.
Yeah.
Of the two of us, I'm not the one wrong, right? But
Yeah.
anyway, so we do care to some degree what the rest of the world is valuing our dollars at, because it does eventually, it certainly affects any of the prices of imports we're buying, separate from tariffs. So it's just something to remember. So I thought it was a great point, Taylor. Oh, the other thing is, since I got my screen up, not that. The other thing is that guy can do like 100 100 pull-ups as a 49-year-old, and I hate him. This S&P 500 price to sales. So a lot of people have heard like price to book or the most famous is PE, price to earnings ratio. So price to earnings is I bought a stock for $10 and they earn $1 per stock per year in profit. That's a price to earnings ratio of 10. Okay. To give you an idea, historically over the last 100, 120 years, S&P 500 historically is around like a 16. So you buy, it costs $16 to invest in the S&P 500, you get $1 worth of shares. Right now, I think it's around 21, 22, so it's pretty high. Companies like Tesla or Nvidia are in the hundreds, right? It's just massive. You're massively overvalued compared to historical companies. But price to sales ratio is how much do I have to pay to buy a stock in the market, or to buy the market, versus for every dollar of sales that's made. And it's at all-time highs. Right? Higher than 08 by far, higher than 2001. Well, actually, that didn't show 2001. Higher than the beginning of COVID, but way higher than 08 and still higher than 2000, 2001. I just can't show it on this graph.
So what does that translate to the
what
the
that
normal
translates to is you're paying it is something that people will understand better. It's stocks is the weird thing that the more expensive it gets, people want to buy more of. But think of this like your house, right? You bought your house for, you buy your house for $300,000 10 years ago, and now your house is $700,000. Mm-hmm. If you wanted to go buy an exact copy of your house, you'd have to spend $700,000 to get the exact same thing that you used to get for $300,000, right?
Yeah.
Same idea. You're paying a whole lot more money for every dollar of sales that these businesses are generating. What it says in the long term, basically, unless we are going through another shift, unless AI is so, I don't know why it's got this arrow here. There we go. So there we go. That's 2001 right there. That's where we're back to these highs, right? So we know what happened in the early 2000s. We went through a bear market that took the NASDAQ down by 83% over 3 years, took the S&P down by 52% over 3 years. It doesn't mean it's going to happen again, but it's pretty auspicious considering, right? So when you look at that, you just need to understand that, yes, long term, you should buy in the market. If you're younger, you should buy in the market. But if you have money that you want to use in the next 2 to 5 years, I would not have it in the stock market. If you're going to buy a house, a car, major vacation, repairs, whatever, because historically speaking, it's going to revert to the mean, and it's likely to be worth less versus more sometime in the next 2 to 3 years. Doesn't mean it's going to happen. Can't guarantee it. I'm just saying.
Where would you store your liquidity or your value to mitigate, to potentially mitigate this pullback that you're talking about?
Well, obviously, I think crypto is a place, right? Because certainly not necessarily altcoins, but like a Bitcoin or maybe one of the few other coins you feel are pretty stable.
Okay, so like Bitcoin, like commodities,
Bitcoin,
right? Things like that.
I think Bitcoin, if we have a major correction. Now, if you look historically over the last 10 years, when we have hiccups in the market, we also have hiccups in Bitcoin, right? So it may not be. It's pretty correlated right now. I would look at things like preferred stocks. which don't have the same volatility. I would look at there's some private credit and equity real estate play structures. But honestly, there's things called structured products or buffer, which are ways of still being in the market, but you're putting a floor under your loss. So like there's a lot of companies out there now that, like I saw one yesterday, UBS offered one, and it was like, you get whatever the market does over the next 18 months up to a 20% growth. So the market goes up 10% the next 18 months, you get a 10, it goes up 20, you get a 20, it goes up 30, you get a 20.
Yeah.
But if it falls, you have to lose, the market has to go down by more than 20% for you to lose $1. So if the market goes down 25%, you would lose 5% of your money in this investment. So there's things you can do. I just don't want just because the market go up doesn't mean the market's always going to go up. That's all.
Yeah. No. I mean, if you look at any chart, and I'm not a chart guy, Drew and all in Kelly over there, at BitLab Academy, Blockchain Basement, they're more Josh, they're more chart guys, but I mean, any time like the RSI or any of that stuff gets overheated, it seems like there's always a pullback, and that's kind of what it seems like you're talking about, is that these markets are very overheated. And when you look at the macro and you see the dollar's losing value and the US debt's going up, you're getting a lot of indicators showing that potentially there's a pullback coming.
Yeah, the hard part is that the reason why you got to be careful is comparing now to previous times, because I know chart guys are looking at the charts and they see that, but there's also, we're historically in a situation we've never been before. And that is all the wealth in America now is concentrated in a very few people. Those people can keep their money in the market. And so they don't really need to be pulling out like before, when you had really, in 2000, let's say, when everything was falling apart, a lot of the wealth was still held by the middle class, and they freak out and they pull their money out. Where now you have, billionaires and multimillionaires hold most of the wealth. And so it's in the markets. A lot of the markets are also just international funds. Plus we have the problem of inflation, which we didn't have before.
No,
now
100%.
And so
7%, the top 7% of our population in the United States holds 93% of the wealth.
And so it's like things are going to be different. Like in moving forward, you're going to have extreme volatility, which you keep seeing, like the market's going up 20%, it goes down 20%. Like that stuff used to never happen within a year. So the other problem is, if you keep your money in cash, this is the thing you have to understand right now. It's a guaranteed loss right now somewhere.
Unless you're using stable coins and are outpacing inflation with DeFi.
Gentlemen, I'm so sorry. I have a hard stop at 1, so I'm going to have to exit stage left, but continue this great conversation.
All right. I appreciate you, Jeff.
We need to stop anyway, but that's the reality, is you have to get in your head that, I just have my money in a savings account, I'm good, or whatever. You're guaranteed losing right now.
Yes.
You got to figure out different ideas of, maybe it is, your, real estate. That's what you want to do. You want to buy real estate. But this year, the fact that chart or those numbers that Jeff showed you, the S&P 500, basically our market did not go up. What happened was inflation killed it, or inflation made it look like it went up. And that's the thing you have to realize. But like right now it is scary, because there will be a pullback sometime here soon.
Yeah, it's definitely going to be interesting moving forward. And I think that you hit the nail on the head. This will be my closing thoughts, but I think Bitcoin, gold, and silver, those are all considered commodities. And I think a lot has changed. In the past, Bitcoin was still very speculative, as far as a store of value. But I think with
Oh, you froze. The institutional buying is really.
What's that?
You froze there for about 10 seconds.
my closing thought, I'll summarize, is basically that I feel like, what Jeff was saying was right. Historically, when Bitcoin was speculative as far as being a store of value, there was, substantial pullbacks. I really think that we are moving from a speculative market to a utility market, especially with Bitcoin, with governments, institutions, banks all stacking it.
Yeah.
I feel like that ebb and flow of the cycle is going to flatten out when it comes to Bitcoin, because like you said, emotional investors, retail, historically have been the ones buying and selling Bitcoin. They're the ones that are buying when the euphoria is there and selling whenever the markets pull back. The sophisticated investor, banks, institutions, and governments, they're just buying and holding. Smart investors, they're buying and holding. So that's going to flatten out, the pullbacks. Altcoins, I think, will still follow that pattern a little more. But as those some altcoins get more established in their use cases, they're going to become like the dot-coms that weathered the storm of the dot-com bubble. You're going to get, these projects that are building out in DeFi and that are, a part of these mechanisms and these platforms that BlackRock and, Invesco and, all of these different Fidelity that, JP Morgan Chase, the things that they're building out. If you're part of the picks and shovels, like Ondo Finance, like potentially Plume, a lot of these projects potentially are going to weather this storm and end up being in that same boat as Bitcoin and not be as vulnerable to the market pullbacks as, up and comers or small cap, projects. But
Yeah.
what's your final thoughts, Taylor?
I want to throw that one thing that I want people to understand, like before, because I think a lot of people right now are waiting for this big boom in altcoins, and I don't believe it's going to happen. One, by two main reasons. One, there's a lot more different crypto projects, so a lot more money is having to be diversified over different projects. You're not going to see the returns like before when there was, a few of the altcoins and all the money was flowing from when Bitcoin was shooting through the roof, and all those crypto bros were selling their Bitcoin down to Ethereum, then down to altcoins. The second issue is you're not going to have it as much because the crypto bros sold their Bitcoin. Most of Bitcoin now is owned by institutions who aren't going to sell it and then go buy altcoins.
Yeah.
So you're not going to have that waterfall effect that you did previously. You'll still have it. I mean, it still will exist. We see it happening with Ethereum, just not at the level that you saw before. That's why Ethereum right now isn't. I mean, it's not even back to its all-time high yet. And so
it's at 37.32.
Yeah. And so it's like, so if you're waiting for this big boom, so you have to change your thought process and going, oh, I'm going to get super rich. I'm going to 100x my return on this. You got to invest in altcoins that are legitimate projects. Like you have to go, is this a fundamental thing that I think is actually going to become something? Because if not, you're going to go to like Dogecoin. It ain't going to go anywhere because institutions aren't going to sell their Bitcoin to buy Dogecoin. Like that would be against the law for them to do because you're buying a completely speculative product.
Well, and that's a very valid point. It's they've gotten the okay with Bitcoin. They've gotten the okay with ETFs, with Ethereum, and a couple of others, but they don't have those sorts of vehicles where these institutions and banks legally can invest in a lot of the alts. Some of the blue chips, but not the majority of alts. So make sure that you're keeping these things in mind when you're investing in crypto. Make sure you're doing your research, investing in fundamentals and not social media posts. And you need to understand that this is a fast moving market and that you need to stay educated because it's always evolving. New legislation's being passed. projects are, coming and going. They're, at different levels of compliance with how they're built out, with, uh, and, maybe limit yourself to, less projects than before, like Taylor was talking about. Before, you could throw a dart at a wall with all the altcoins on it and you're going to make a 10x.
Yeah.
Now I really think that a 10x is only going to be in good solid projects, and the rest of them, you might see a pump if they're hyped up enough on socials. We could be wrong, but we are moving into that type of market for crypto. We are at the beginning stages of it becoming a legitimate class of assets. So,
Yeah,
Taylor, go ahead.
That's why I like your focus on real world assets, because institutions can invest in those. Like that.
That's why I'm in them.
Yeah, and so I think you're right on when you're focusing your attention towards that through this DeFi platform that you've been pushing out there.
Yeah,
you're trying to find the one that's going to take off, but that's going to be the hard one. But if you pick the right one, it's going to be great.
Oh yeah, and our community is definitely stacking our bags with Plume and KTA and Mamo and Morpho and Moonwell. And so yeah, I mean, if you want to learn how to do DeFi and how to stack your bags for free, there's no better DCA than free crypto. So with that, Taylor, give me a call later when you got a minute. I definitely need to talk to you about setting up something to mitigate my taxes and whatnot. So.
Yeah, we do. We'll I need to get Jeff on that phone call too, because he's the actual professional.
Oh, absolutely. So yeah, let me know when you guys got time. But till next time, Veteran Crypto out.
Thanks, Mike.